Good day, traders. It's been a minute since I last shared a video. So in this video, I'll just be doing medium to long-term market forecast, focusing mainly on the US dollar pairs. Okay, so as you all know, the market forecast tool that I use is a Elliott wave theory. So far, it has proved to me to be the most statistically accurate method to predict the market. Okay, so for those who are still new to the method, the Elliott wave describes a market cycle as consisting of an impulsive wave, which is made up of 5 waves, followed by a corrective cycle, which is made up of 3 waves. And the 8 make up a complete market cycle. Okay, so without wasting much time, I'll just go right into the analysis, starting with the US dollar currency index. So right here, the market seems to be in a corrective phase, and I've identified this as our wave A, and whatever is playing out here, in fact, the wave has already played out. This corrective phase here, 1, 2, 3, and make up our wave B. And then right after, I expect the US dollar just to drop. Okay. So this is a very, very interesting point on the US dollar pairs, as you guys will see when we get more into it. Right. So we are just here at this point where that B wave has just completed. So it's really a good time to position ourselves for a very huge downside movement on all the US dollar pairs, because the US dollar is weakening. It seems to have completed this ABC corrective structure, and I expect an impulsive wave to the downside, which also corresponds with a lot of news that is going on. I really don't trade the news, but obviously there's going to be some relationship there between the two and the news. Okay, so as we can see, our wave B has ended around that point there. And now what we are witnessing here is the beginning of a very huge move to the downside. So possibly this is our wave 1 to the downside, and that correction there, as we'll see, has already completed. So that's a wave 2. Now we're expecting a wave 3 to the downside. So for those that understand the Elliott wave, we know that wave 3 is the most impulsive, most aggressive move in any sequence. That means this move here, this wave 3, will take place in a relatively short period. Okay. Let me just zoom into that structure there so that we can see it more properly. If we check it on the weekly, right, we can clearly see all the 5 waves of this impulsive move to the downside. We have got 1, 2, 3, wave 4, which was a running flat, and wave 5 there. And after that wave 5, this correction here is an ABC corrective structure. So that's A, B, and wave C. So A, B, and C. And we are right at the termination point of wave C, expecting very, very crazy moves to the downside. Okay, so in other words, I'm expecting the US dollar to crash. That means any pair that is paired with the US dollar, you already know how it's going to move depending on whether the US dollar is the base or is the core currency in that pair. I personally do not trade the dollar index. I just use it to forecast what all the other pairs are going to be doing. Right. So with that in mind, let's look at the British pound against the US dollar. Since the US dollar is weakening, that means the British pound is going to go to the upside. I expected the reversal to be around this point, but as always, we can only forecast the market, but we don't decide what the market will do. So I had to be patient and wait for signs of reversal around that point. If you check, even with the stochastic RSI here, we can see that it has resetted at the bottom. And this here signals that the pair is ready to move up, or the downward, this wave here has completed, which is the third wave in the correction, or a running flat there. So we have an impulsive 1, 2, 3, 4, 5, making a wave 1, right? And this here is a W, X, and Y correction, which is completed around the stage, and I'm ready to take the pair to the upside. I'm already running this trade, and it's just started. I've gotten in. I'm probably going to hold on to this position for a couple weeks or so until I start to see reversal. So this was a very good trade for me. The risk to reward is very nice. My stop loss was at $47. I'm already running a profit of $36. I'm expecting minimum profit target should be around at least equal legs. So when the market gives me a move that is similar to this one here, around these levels, that's where I'm going to start thinking about collecting some of my profits. So that's like 604 US dollars, right? Compare that to a risk of about $47. That's a very rewarding trade there, right? So that's it on the British pound US dollar. Perhaps let's just zoom out for a more detailed analysis on that pair. Okay, so also this pair has got an impulse to the downside. This should be 5 waves, right? Followed by a 3-wave correction, wave 1, wave 2. I'm expecting a wave 3 to give us at least a regular flat, but it doesn't always have to be a regular flat. This can be an extended flat, meaning it can reverse around those levels. But in any case, I wouldn't expect it to come to the start of that impulse. So this could be most likely going to be a regular flat, or it's going to be a running flat. So there's also a chance that the market can reverse before it reaches that level there, right? So for day traders, it's a little bit tricky, but for long-term traders like myself, since this move here has already taken off, if you miss this trade from around these levels, I would advise that first we wait. This appears to be some sort of like correction. Just wait for a deeper correction. When the market appears as if now it's selling, then you know that it's you just keep patiently waiting until you see something like a reversal there and a flag. Then you can also join in on that uptrend there. Okay, so waiting is very important so that you get a very nice entry, a very nice risk to reward on that pair. Okay, I'm already in the trade and I've already put my stop loss. But if you can still, if you want to jump in straight away, your stop loss has to be at this low here. That's on the British pound US dollar. Okay, then US dollar South African rand. I don't have any trade running on this pair, but it's also paired to the US dollar. That means whatever the US dollar is doing, this pair is also doing. So the US dollar is crashing. We also expect the US dollar to the South African rand to crash. I've had a very nice profit on this upward move, and I was patiently waiting for this down trade. Right, this could be a very nice opportune moment to trade this one. I think I can also add just a small position. Let me short that to the downside. Okay, now I'm also in. I just want my stop loss to be right here, $44 and no more. Okay, so I expect this pair to keep running to the downside and give me more profit there. Right, so this is what I'm expecting going forward. You can also take that trade here. If you're watching this video, you can also take that trade and make sure you also put your stop loss on that level, because we don't expect the US dollar ZAR to invalidate this high and keep going forward. That would mean that it's still going up. It's not yet reversing. But this is most likely going to be reversing right at that point because the dollar is also crashing. Right? That's a free trade setup right there. Then next we go to the Euro US dollar. This is, I really love trading this pair because it's like the inverse of the US dollar index. So I don't trade the dollar index, but I trade the US dollar against the euro against the US dollar. If you check on the structures of these two, they are exactly the inverse of each other. This exact same correction to the upside, this one, sorry. So this 1, 2, 3 that we are seeing to the upside and this reversal on the US dollar index is the exact same, but only in the opposite direction. So the euro is going up and it's correcting in the downside. Let's just have a look. Okay, so the euro is giving us this 1, 2, 3 to the downside, which is the exact inverse of what we are seeing on the US dollar, and the market has reversed around those levels. So you can also take advantage of this trade and make sure to place your stop loss right at that point. The expectation is that the market is going to keep rallying upwards, and minimum profit target should be, at least when it comes to equal legs with that. But I expect this pair to keep going up. As you can see, I have here this wave, and this is a WXY. So this could either be a running flat, which means it could reverse before it reaches that level. It's very possible we can have a running flat reversing before that level, or it can be an expanded flat. Why? Because we've already broken this law in our wave X. That means if it's not a running flat reversing around those levels, then it's going to be an expanded flat. That means it could even go much more up and then come down. Whatever the market is going to do, the market will tell us how that is going to play out. Okay, we don't decide what the market does, we just forecast and we let the market tell us what it's doing. Those that trade candlestick patterns, you can also see there's a pin bar there, and this is a very bullish engulfing candle, confirming that indeed the market is going to give us a rally to the upside. Then I also have gold against US dollar, very interesting pair. This is very profitable because when it moves, it really does move. So I had a blue box set up there. I pinpointed this trade right from the blue box, okay? So after this rally here, 1, 2, 3, 4, 5, let me just, so we had a wave 1, perhaps a different color. Let me use purple. So we had from these lows, we had a wave 1. This here appears to be a running flat, wave 2, wave 3, wave 4, and wave 5 terminating around that level there. Then from here, we had a WXY correction that I've marked in blue, terminating right in the blue box area. Again, I expect this pair to give me a rally upwards, minimum profit target, at least when the market has given a leg that is equal in length to this one here. Okay, so also bullish on gold against the US dollar. Bitcoin, US dollar, again, it's like all these pairs which are paired against the US dollar are just going bullish because the US dollar is weakening. Okay, so after the Bitcoin against US dollar was crashing, this was the final wave in that correction. So what we see here is an expanded flat correction with 1, 2, 3, 4, 5 to make a wave A. Then we have got 1, 2, 3, which is textbook wave B. And this one here is also an ABC. This is also an ABC corrective structure. So it's a 5, 3, 5 corrective structure giving us a wave C, terminating around those levels there. Then now the market is now giving us a bullish trend to the upside, okay? So one could say this was 1, 2, 3, 4, 5 wave A and then a correction. Now that correction should have terminated around these levels here. But on the Bitcoin, I'm not very confident that this move has already terminated. It looks like we might have one more leg to the downside on Bitcoin before it actually pushes to the upside. Let's have a closer look there. Okay, even on the indicator, the stochastic indicator, we can see that we haven't really hit the oversold mark there. So it's very possible that the Bitcoin could still be making a correction for one more leg to the downside, right? So this could be a wave A, this could be B. We could still have another wave C. Just wait for that to come down to probably around these levels. Then we can now start thinking of taking the Bitcoin to the upside. Just hang on the Bitcoin. It's not yet ready for that buy. And I also wouldn't advise us to trade this to the downside because now this can reverse anytime without giving a second warning. We just need to be patient and wait for the market to confirm that really the Bitcoin is ready to go upside, then we can place our buys. Australian dollar against the Japanese yen. So this one is not paired with the US dollar. And my long-term forecast on this is that it's going to be bullish. And that is based on, this is an impulse to the upside. One could say that is a correction or another impulse to the downside. But right here, current market moves. We've got a 1, 2, 3. We've got 1, 2, 3, 4, 5. Right. So this A, B, C. This could have been correcting this initial swing. So we have a swing, a three-wave correction. So I expect another swing similar to this one here. And we can also see the market seems to be confirming that. If we are to zoom in here to that structure, what the market has given us is like an impulse to the upside. We've had an expanded flat correction over here, right? And then now we're having a rally, a small rally. This correction is not yet complete. This correction is not yet complete. I expect at least one more leg to the downside. And then after that leg to the downside, just wait for the market to break above this line. When you see a bar that closes above that line, then you can place your buy, place your stop loss at right at the lowest point that the market reaches. Australian dollar, Swiss franc. So this one here seems to be one huge swing to the downside. Okay, so the dollar seems to be weakening through and through. This is a bearish market. The dollar is weakening against the Swiss franc. So I was expecting a reversal around this area. This was a blue box area for this. If this was a three-wave correction, this was a nice blue box area where we could get reversal. But as you can see, that blue box has already been invalidated, which means the market is still going to continue going down. So we should probably change our count there. I'm no longer seeing that as an ABC, rather it's a 1, 2, and we are in the middle of a wave 3. So if you want to take that to the downside, obviously it's going to invalidate this level here. It's going to break that low. But do we jump in right now? Not at all. What we do, we wait for a similar correction, the same order as our wave 2 there. So we should at least get a 3-wave pullback to give us a wave 4. Sorry, that wave 4 shouldn't, you know, the rules of Elliott wave theory, the wave 4 shouldn't invalidate that level. So we are looking for 1, 2, 3, 4, right? And when you get that 3-wave pullback, then you can take the pair more aggressively to the downside. I personally do not like trading this. I traded it when it just touched into the blue box and I got lucky. But when I saw these 3 waves, I just quickly took my profits there. This is a very, very rewarding pair for those that like trading it. A very small move could result in hundreds and hundreds of dollars. Okay, then the US 30 and all the other indices, you know, the indices have got, they follow the Dow. Okay, so we were in this correction for a very long time. The whole of last year, the market was in that correction. So one could look at that as a W, X, and a Y corrective structure. I remember when this was playing out, this was very confusing because first the market gave a 3-wave there. I thought it was ready to go to the upside, only to be taken out at my stop loss. Then we had another 3 waves there. I was like, okay, WXY, now the market is ready to go, only for it to just go up in 3 and then come down and take again my stop loss. So that was WXY. Now that the market has completely given us that structure, now it's very clear that all the market was doing there was a WXY, the whole of last year, right? And then as soon as that is done, we can all see now that the market is ready to go up with this impulsive wave 1. Right after that wave 1, we've got this correction here, 1, 2, 3, 1, 2, 3, and 1, 2, 3. So I'm still waiting for that to complete, to make a W, an X, and a Y, which gives us a wave 2 in the yellow degree. So all of this would be wave 2 in the yellow degree. And from there, we expect the market to keep going up. So that's it on the indices, because the same structure you see on US 30 is the same structure on the NASDAQ, is the same structure on the US 500. In fact, all the indices will have a similar structure there. Then my best trade so far for the past 2 weeks was on the British pound, Japanese yen. Okay. On this pair, we've had a very nice impulsive 1, 2, all of this is wave 3, wave 4, and wave 5. Right after that impulse, now we've had a 1, 2, 3 to the upside. Right? This is a complete correction on its own. We can call this an A, B, C corrective structure. So the market is ready to go to the downside, but we've had so far just this impulsive one. Okay, this is a smaller degree. Let me use green. So we've had 1, 2, 3, 4, 5. This degree is smaller than that yellow degree. And after that, we've had what appears to be 1, 2, 3 correcting this. So any minute from now, the market can reverse and continue going to the downside. Okay, that is an interesting one. I should probably zoom in and check what's going on there and start thinking about my exit. Okay. So this final swing appears to be coming to an end. We should expect a reversal anytime soon. Let's zoom into that on the daily. So on the daily, okay, all right. So this here, this is a little bit scary because it doesn't look like the market still wants to keep pushing up. Perhaps this was 1, 2, 3, 4, 5, A, 1, 2, 3, B, 1, 2, 3, 4, 5, something like that, C. Is the market going to give us one last swing before a reversal? Or is the market just going to reverse from the current levels? The market has to give us more information there. But now I don't feel safe holding on to that trade because this could just be in 1, 2, 3 corrective structure, and then it's just going to come down heavily on me there. So on this one, I would rather just collect my $283. That's not bad. Okay. That was a very good trade for me, and it was very rewarding. I took it from around these levels here. I took it from this low. That's when I entered. So at least that's like 1:2 risk to reward ratio minimum. Okay, and on any day, I'm happy with $300. Okay, now I also have another trade running on the US 30. And this chart is a little bit messed up. There's a lot going on there. But we have a clear 1, 2, 3. So that's W. And 1, 2, 3. That's X. 1, 2, 3, 4, 5. Okay, so now we have to change that because WXY corrective structures should be 3, 3, 3. If it's 3, 3, 5 or 5, 3, 3, as long as there's a 5 somewhere, that becomes an ABC corrective structure. Okay, I think maybe I'm going to do a more detailed video on these corrective structures. So this one that we have here is an A, B, C because of the 5. So I've had this swing. I'm already running in that trade. If you're not already in, don't jump in at this level. Now this is very expensive. Wait for a flag. The market is going to correct. And then as soon as it closes above that flag, then you can now take it up, and at least you have your stop loss somewhere there. it would be less expensive than trying to jump in at this level. And then if that doesn't play out, you will lose a lot of money. My risk on this one is $16. And I'm in that trade for the medium to long term. Okay, that's all I had for you today, guys. Until we meet again in the next video, remember to always trade responsibly. Cheers and bye-bye.